Hello and welcome. We're about to demystify something called capital gains tax. You know, it's a tax that, thanks to some recent changes, is catching thousands of ordinary people all across the UK completely by surprise. If you've made any kind of profit on an investment recently, this is something you're really going to want to see.
So let me ask you a quick question. Have you recently sold some shares, maybe cashed in on your crypto holdings, or perhaps sold a valuable family heirloom? If you're nodding along, saying yes to any of those, then you absolutely need to pay close attention. What used to be a niche tax concern is now, believe it or not, a mainstream issue for millions.
Now, to guide us through all of this, we're relying on the fantastic expertise of the tax professionals over at My Tax Accountant. They've broken down absolutely everything you need to know to navigate this system in 2025 and, well, beyond. Let's start with the single most important number you need to burn into your memory: £3,000. For the 2025 to 26 tax year, that is your brand new annual tax-free allowance for capital gains. If you make even a penny more in profit than that, you are officially on HMRC's radar. It's a huge drop, and it's exactly why we're breaking this all down today. So here's our game plan. First, we'll try to understand this new tax landscape. Then, we'll look at your reporting options, run through a simple how-to guide, and explain exactly why this has become so critical. Crucially, we'll cover the common pitfalls to avoid, and then we'll finish up with your next steps. So, is this a new tax headache? Well, for a lot of people, the answer is yes. The rules have changed, the goalposts have well and truly moved, and what might have been a completely tax-free gain just a couple of years ago might now land you with an unexpected bill. So let's get to grips with the basics. First things first, what on earth is capital gains tax? Well, put simply, it's a tax on the profit you make when you get rid of an asset that's gone up in value. It's not a tax on the total amount of money you get, just the gain. The keywords here are profit and dispose of, which, can mean selling it, giving it away, swapping it, or even getting compensation for it. Okay, so how do you actually tell HMRC about these gains? Now, this is where it can get a little bit confusing. There are actually two different systems, and the one you use depends entirely on what you sold. Getting this right from the very beginning is absolutely vital. Let's break these two systems down. On the left, we have the real-time CGT service. That's our main focus today. It's for things like shares, crypto, and personal possessions, and using it is optional. But look over on the right. For UK property, it's a completely different story. That service is mandatory, and you have a very, very strict 60-day deadline. Miss that, and you'll be facing penalties. Okay, so you've sold some shares, or maybe an antique. Your gain is over that £3,000 threshold, and you want to be proactive and use the real-time service. How do you actually do it? Let's walk through the whole process, step by step. Luckily, the process is pretty straightforward. First, you just need to confirm you're using the right service. Remember, this is for non-property assets. Second, gather all your paperwork. This part is so important. You'll need dates, prices, and any allowable costs like broker fees or maybe a professional valuation fee. Next, you just log into your government gateway account. From there, you'll enter the transaction details, review the system's calculation, and hit submit. Finally, HMRC will give you a payment reference to settle any tax you owe. Simple as that. Let's see this in action to make it real. Let's take Oliver, an IT consultant based in London. He made a £30,000 gain on some shares and another £15,000 from a painting. With a total profit of £45,000, he's obviously way over the new £3,000 limit. So he gathers his documents, logs into the real-time service, and reports both of those sales. By doing this, he settles his tax bill nice and early and avoids any nasty surprises down the line. It's a perfect example of using the service proactively. So let's get to the core reason this is such a hot topic right now. Why do people like Oliver, who might have never even thought about capital gains tax before, suddenly need to pay such close attention? Well, it all comes down to one thing: that shrinking tax-free allowance. Just look at this timeline. It shows the dramatic shift. Just a couple of years ago, back in 2022/23, you could make over £12,000 in profit, completely tax-free. Then it got slashed to £6,000. And now, for 2025/26, it's just £3,000. This massive reduction is pulling thousands and thousands more people into the CGT net every single year. So what does that actually mean for your wallet? Let's take a simple £8,000 profit. Under the old 2022/23 rules, your tax-free allowance of £12,300 would have covered this completely. Your taxable gain was zero. Zilch.
Now fast forward to 2025-26, that very same £8,000 profit is now £5,000 over the new £3,000 allowance. All of a sudden, you have a £5,000 taxable gain. It's the same profit, but a very, very different tax outcome. So, how can you manage this? Here's a quick pro tip segment with some key strategies. First, if you've made a loss on another asset sale in the same tax year, you can actually use that to reduce your total gain. Second, meticulous record keeping is your absolute best friend. Every single pound of allowable cost, like legal or broker fees, reduces your taxable profit. Third, if you can, try to time your sales. Selling assets across 2 different tax years could let you use 2 annual allowances instead of just 1. And finally, think about tax-efficient wrappers like ISAs, where your gains are completely shielded from capital gains tax. But that's not all. Here's where most people go wrong. Knowing the rules is one thing, but avoiding the common traps is what really keeps you out of trouble with HMRC. And stay with me here. The next point might actually surprise you.
Let's walk through these common mistakes. First, please, don't use this service for property sales. That has its own mandatory 60-day service. Second, your accountant can't do this for you. The service is for individuals only. Third, once you've filed your main tax return for the year, you can't go back and amend this report. Your tax return is the final word. Fourth, and this is a big one, if you already do a self-assessment, you still have to include the gain on that return. And finally, keep accurate records. If you forget to deduct your costs, you'll simply end up paying more tax than you need to.
Okay, we have covered a lot of ground. The new rules, the reporting process, and all the traps to avoid. If you're feeling just a little bit overwhelmed, that is completely normal. The key is knowing what to do next and, more importantly, where to turn for help. Before we wrap up, let's just quickly summarize the key takeaways. First, the tax-free allowance is down to a mere £3,000. Second, the real-time service is your go-to tool for shares, crypto, and other non-property assets. Third, for residential property, you must use the separate UK property service with its strict 60-day deadline. Fourth, while the real-time service is optional, it's a great way to stay on top of your tax bill. And finally, good records are no longer just a nice-to-have, they are absolutely essential. Now, it is really important to remember that the information in this discussion is for general guidance only. It shouldn't be relied upon exclusively to make financial decisions because tax is complex and very specific to your personal circumstances. So before making any decisions, you must consult the experts. The team at My Tax Accountant are ready and waiting to help. You can reach them by phone at 0208-570-8531 or by email at info@mytaxaccountant.co.uk. For a deeper dive, check out their full article on this topic on their blog. And of course, be sure to subscribe to the My Tax Accountant YouTube channel for more clear, simple tax guidance. So I'll leave you with one final question to think about. Now that you understand this new landscape, how will this sharp reduction in the tax-free allowance actually change your investment strategy for the year ahead? It's definitely something worth considering. Thanks so much for joining me.